The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Great to be here with you on this Tuesday afternoon. This is the COB. I'm Nadine Blaney here with, not Colorado, here with Danny AQA. We'll change that. Danny, big day, and it started before the market even opened with the news that Qantas' CEO is stepping down early.
Indeed. We have been chatting non-stop with all the experts today about what's been going on with Qantas, and really, I think lots of great interviews to, do a deep dive. I just had a great conversation with Michael Frazis about Qantas, but look,
what was he saying?
It's pretty negative. Yeah, there's a lot stacked up against the company at the moment. They've got to spend a lot, 15 billion potentially on, re-equipping the fleet. They've let the fleet age. Service has gone. There's lots of headwinds. He's not, buying or selling or shorting the stock, but his analysis I thought was very comprehensive.
You can listen to that online ASAP. Look, it was interesting to see the initial share price reaction because, of course, it was positive at the beginning, which
it was.
Perhaps Alan Joyce could have been a bit offended by, but that quickly turned around, ending the day relatively flat. We spoke with Alex Pikulis from Harper Bernays, that's up online as well, and his take was that, is it in the price? Sort of, but perhaps more pain to come. My question is, and I didn't get to actually speak to anybody about Qantas specifically, really, is Vanessa Hudson, so the new CEO as of tomorrow. I mean, if you're looking for a circuit breaker, if you're looking for something to change, I mean, she's
internal.
Yeah, and there is a culture problem, you've got to say, at Qantas when you consider if the ACCC's allegations are correct and it's selling tickets, for
she was
flights.
The CFO, wasn't she?
Yep.
So she's given the tick to everything.
Absolutely. So that's my sort of cynical take on what's going on with Qantas, and the fact that you literally cannot have a conversation without getting an anecdote, something that's gone wrong, somebody who has suffered. And so, I mean, what a fall from grace for the spirit of Australia. But we'll get there.
Absolutely.
In a little
the poor
bit.
old flying kangaroo's a bit bashed around at the moment.
Sure is.
I compared Joyce to the Roadrunner. He's making a dash out. Now, whether or not he's going to go off the cliff afterwards.
Yeah, well, and Vanessa Hudson perhaps bumping up against the so-called glass cliff when females are brought in to clean up a mess. Anyhow, we'll leave that there. Talk about the three themes, when we consider where the market has been today. Really, a lot of the conversation has been around RBA rates. It appears, seems to me, a lot of the commentary is that, perhaps another interest rate hike is becoming less and less of a possibility.
Isn't that really interesting? I spoke to an economist today from VanEck, and he actually thinks we've got another one or two. Can you believe it? But we were just saying off camera, if you have a look at the market reaction, so the share market put in a bit of a rally, the buyers came in, but the Aussie dollar, it is 63.94. It is off almost a whole percent, which means some traders have obviously thought this was a very dovish tone.
Interesting, because when it actually happened, there wasn't a significant reaction.
No.
So well priced in at that time. So it's the digestion, of course. And one thing that I picked out immediately of the statement today was the reference to China's economy and the property sector there in particular. It has been such a domestically focused statement for so long, rightfully so. But we haven't heard a lot of commentary from the Reserve Bank, in particular on China, for quite some time. So I thought that was interesting. And of course, it's in a week that we got the services data today. We've got a lot of data coming from China. And we'll be speaking with Jessamir from Moomoo a little bit later on about that one as well. So Danny, markets, it was a bit of a nothing one. Giving up all of yesterday's gains,
Absolutely,
pretty much.
But it's, it's not too bad. We didn't have much of a lead. So I've got the ASX 200 off almost 20 points, about 17.5 or 0.24%. So it's still hanging on by its little paws at 7,301.
Well, a little bit of thanks to the miners, I suppose. BHP was down, in early trade. but it looks to finish up by about 0.2%. Lots of selling, though, in a lot of those lithium names, which we might touch on. Gold coming under a lot of pressure as well, and energy today.
I think Viva, didn't that go ex-dividend
today? It did
go
ex-dividend.
Yeah, and so that would contribute to its almost 3.75% fall.
Utilities look not sort of a great standout today. You can see that mixed picture there. Healthcare, I had a really good chat with Luke Lairdive. I'm just in the process of putting them up online, Danny. And he had named 3 buys in the healthcare space. And you can see today more resilient, proving more resilient than the broader market overall. A
bit of a defensive trade going on, and there's a lot of them in the green today, which is good.
And includes consumer staples, of course, Woolworths, Coles, both in positive territory, Endeavour as well. So that's a bit of a snapshot of what happened there in the sectors. And to your earlier point, Danny, right now, we talked about it yesterday, ex-div sort of having an impact on these stock specifics.
Absolutely. So there we go. Corporate travel, Northern Star, Origin, Pilbara Minerals. I got confused earlier whether Pilbara went ex today or yesterday. It's today. And Helia Group. Now, of course, when you do have companies going ex-dividend, it is a bit of a drag on the market as well.
It is. Okay, so Qantas was the story of the day. We've mentioned it already. I think we've got the share price to show you for Qantas. Just a bit of consternation as the market digests everything that has gone on with Qantas, everything that's to come, whether or not there will be a sea change. That's incorrect. Can we lose that? And the stock of the day was in fact Qantas. So let's take a listen to what our expert guests on the call had to say today.
Bit of a handball for the new CEO, and maybe we see some turmoil over the next couple of years. And like I said, I think that share price reaction is actually quite rational. So look, it's probably one I'd be exiting. I think there's more headwinds than tailwinds for Qantas over the next probably at least 1, maybe up to 3 years. And it's probably not the place where I'd want to play right.
I don't think too many people, except the shareholders who made an absolute killing out of Qantas when they bought it at the bottom. I think not too many other people will revere him after he's left. I don't think there's too much of a bad smell now. Fly them, don't buy them.
Yes, well, both Rudy and Luke, not very positive on the stock. Don't need to be there. I mean, screaming buy in the middle of the, the travails of the pandemic. But, they potentially have over-earned and there's a lot of headwinds. So
I agree.
That really seems to be the theme coming out from most of the experts. I haven't heard anyone say this is a screaming buy.
Yeah, well, that time will come, perhaps, but just not today. Look, let's look at the bigger picture. What's driving markets overall? Jessica Mears joining us from Moo. Jessica, so glad to have you here with us today. Thanks for joining us. Look, one of our key 3 themes was China. The RBA called China out specifically in its, pretty short statement. So it used some of its copy to talk about China and the property woes there. What's your assessment now that we're getting some further data trickling in from the tiger economy?
Well, I guess the proof is in the pudding, and the fact is that China's economy is really not getting a leg up despite, I guess, a couple of rounds of stimulus. The fact of the matter is it's just not enough. So the property sector in China makes up 15% of their economy, and that is facing a huge credit crunch. And so that is why we're seeing Fortescue Metals, BHP, Rio Tinto and Minres, a few other large miners as well, really stuck in a trading range here. And we think there's probably going to be further downside. So there is a risk of a further pullback, and we are seeing shorting volume actually pick up across the board, and that remains one of the big trades for 2023.
Oh, interesting. So the shorters are picking up, are they, in the big Aussie miners?
Yeah, but more broadly, shorting across the entire market. And that is because there is a huge risk here that the bulk of the bond payments are due to be paid out in January. And there's a huge risk that a lot of Chinese developers, in fact, 23 of the 50 largest property developers in China, are expected to potentially miss their bond coupon payments in January. So, I mean, we've got to think about the ramifications of that. What happened when Evergrande missed their bond coupon payments? Then we saw ratings agencies downgrade Evergrande, and then that caused a ripple effect across the entire global economy. You name it, most stocks were impacted. The S&P 500, the ASX 200, Apple, Tesla, all of those stocks that you can imagine that make a fair chunk of their money from China were heavily impacted. And this is what the market is toying with right now.
Okay, so companies that you think are most at risk in this scenario?
So we saw the mass exodus last week of Fortescue Metals. I guess that is really proof in the pudding that a lot of these large miners are seeing massive headwinds ahead. So Fortescue Metals, by far and doubt, they're making 90% of their revenue from China. They're obviously likely to see the biggest pullback if China's property sector does come into further trouble, which is probably quite likely. Also, you've got to look at the other miners. So Rio Tinto, they also do make a pretty large chunk of their revenue from China. They're a bit more diversified, a lot more diversified than BHP, than Fortescue Metals, and of course BHP. So BHP makes 54% of their revenue from China, Rio Tinto 56%. But if you add the three together, they make up 14% of the ASX 200. So if we do see the property sector shake, the iron ore price, which is up 33%, from its low, that'll probably see a haircut. The copper price, that's really, seeing a bit of, I guess, call bluff. It's not really saying that the stimulus from China is enough. The copper price, just look at it, it's only up 6%. So the copper miners are likely to face some downside pressure as well. And then, of course, the lithium miners, we've not seen all of them really do quite well. The majority down and out, but we have seen on the back of Albemarle tapping LTR or Liontown on the shoulder this week again. We've seen a lot of moves and a lot of excitement in the small cap lithium space, and I do think that that's probably pretty vulnerable as well.
Interesting. I noticed, I spoke with Jerry Harvey today, bear with me one second, because Harvey Norman's coming out of the top 100 in the ASX, and Leo Lithium is going in.
What? Even after yesterday?
Yes, yeah. So that's just a bit of an aside, but it just shows, that it's certainly there are some risks out there in the lithium space, even though they get popped into the ASX 100.
Yeah, absolutely. But I do think more broadly, if you take a big term view, I think lithium is here to stay. So there's a lot of talk about solid state batteries. Will solid state batteries replace lithium? And I think people forget that you actually need about 5 times the amount of lithium for a solid state battery as you do for a lithium ion battery. So make no mistake, there's no way that lithium demand is going to slow down. So if you take a longer term view, when you are looking at those lithium stocks in your portfolio, that would probably be really advisable. If you're trading, you're probably it's probably best suited to a sophisticated trader to be dabbling in lithium right now, given stimulus is all over the place. But it really does make a lot of sense to look for those miners that do have offtake agreements with those large and EV makers, because we do know China, if we just think about 2025, China's estimated to drastically double their EV production and sales. So it seems a bit ludicrous, but let's see what happens. But all in all, that's definitely going to put a floor under lithium demand.
Well, Jess, it's been a pleasure to have you join us on the COB. We hope to have you back. Thanks for hitting one of our key 3 themes of the day. Appreciate it.
Thank you. Thanks, ladies.
Jessica Meir from Moo there.
And I have to eat my words. I got my L's confused.
Ooh.
It's Liontown Resources that is going into the ASX 100. When I said, I thought, it can't be large enough. I've got my L's confused. So
this is what happens when we're live. There's no shame. Can't remember everything. Like I said yesterday, of all the 2,000 companies, sometimes the L's get confused when we're talking about lithium. Now, Danny, why don't we, now that the market's closed, last of the day's trades have gone through, start to take a look at some of these leaders and laggards. And yeah. As I was saying, as far as the leaders go, let's bring them up on screen. There wasn't a lot going on under the hood as far as I could see, at least for some of these companies that came through as some of the leaders. So Omni Bridgeway, that's a very odd one to have there leading. We've got Grain Corp. One of the best performers, no news.
No news.
IGO, no news.
It might have been something to do with, grain crops or something. IGO has actually been on a tear since they announced their results last week. It was a very, very strong performer. And I do remember because Kyle was quite proud of the fact that he actually owned some shares in that one. Iris, on the other hand, really had terrible results and were heavily sold off. So it looks like there's some bottom fishing coming into that one.
Well, I see that there's been a change in directors' interest notice. I didn't have a chance to look at it today. So whether directors are buying, inspiring a little bit of confidence. But look, if you look at the gains that are on the screen right now, it's not as if any of them are massive, let's be honest. I mean, we do have a little bit of a theme coming through with Hub 24 also on the list. IPH is one of the best performers today. There's just not a lot we can take as far as themes or stories by the leaders here today. Flip side, though, there is a bit of commonality between these companies on the screen.
Yeah, absolutely. So a lot going on in the gold sector, and Chalice Mining again. It was off at least, 30-40% last week, so another 14% fall today.
Yeah, Jefferies has cut its price target by close to 70%, cutting it to $2 per share, saying that there's some big funding hurdles for its Gonneville project. So it's also been downgraded to underperform. So yeah, just as you said, plenty of negativity kind of piling on Chalice Mining right now. And in keeping with the theme of ex-dividends, that's what's gone on with Viva Energy today.
Absolutely. And I'm just having a look there for West African Resources. Doesn't seem to be any particular news there because their results were out at the back end of last week.
I guess gold is coming under a bit of pressure. You know, we've had a little bit of risk on lately, of course, with news of the China stimulus coming through. That's put a little bit of pressure on gold. It just hasn't really been in favor. Correct me if I'm wrong.
No, that's absolutely true. It really has a lot to do with what's going on with real bond yields. And although you did see US 10-year treasuries coming back a little bit last week, you need those real yields to come down, and it's not happening at the moment.
Okay, in the small to mid-cap space, Kingsgate Consolidated, there you go, we're talking about gold and proving us wrong, up by 9%. Seven West Media up by 8%, and flipping the page to the laggards. Again, it's just a little bit of a motley.
Jervois Global again. That's one of Kyle's favourites. I still don't know what they do, but nevertheless.
Oh, Kyle, if you're listening, we miss you, but we're having a good time here regardless.
Exactly.
Let's take a look at what's happening overnight, see if there's anything good that we can hang our hat on. The Eurozone PPI, Danny.
That'll be interesting because the Eurozone really is, Germany is under a lot of pressure at the moment. They're talking about another recession. I think we touched on that yesterday. And US factory orders. So again, the US opens up tonight. So that will be interesting to see. Let's have a look and see how the futures are doing at the moment.
Yeah, well, I just was reading some Westpac analysis about those factory orders, expecting to see last month's bounce fully unwind. So again, it says providing a more volatile reflection of the underlying weakness that are present in core orders. So yeah, watching for that activity read there tomorrow. national accounts activity.
Oh, GDP. I have spoken to a few people about that, and everybody's pretty sanguine at the moment. I don't think they're looking for any major upside surprises. I've sort of heard 2.1%. Is that sort of the level that you've heard?
Yep, yeah. I know that ANZ actually increased, revised, or I should say firmed up its forecast for the GDP. It's expecting to see quarter-on-quarter growth of 0.4%, saying that the GDP partials have actually come in on the stronger sides based on its expectations. So it's sitting at 0.4% quarter-on-quarter, 1.9% year-on-year. So that's ANZ's call. So look, we'll bring you live coverage of that. You will, specifically at 11:30 tomorrow morning, just to get you across what's happening. And we will also get you across all, the wash up from whatever happens on Wall Street tonight after a holiday.
Absolutely, that holiday. And let's have a look and see where we've closed, because it looks like the ASX 200 and the COB put in a really firm rally into the afternoon session. COB 200 just down 2.3 points or 0.17%, and the ASX 200, wow, down 4.5 points, 7,314, which will probably get those technicians pretty excited that we've held that crucial level.
That is the program for today. Thank you so much for joining us throughout. If you would like to catch up on any of the interviews that you've missed, all of those that we've name dropped in this program, please do go online at ausbiz.com.au, and we will see you
tomorrow,
bright and early tomorrow.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.